the trend line from those points, and we start drawing. Now that's awfully steep. It's a very short period of time, so you can start working your way against those points until we start seeing something that sticks the London Open, and that's the line that sticks the London Open just there. So you can see that it's definitely going to be a sell. You're starting to look now at that opportunity to sell. You can see all the pins above this line here, and then the sell-off begins, and from that sense, that trend line has been short all the way through that period from the London Open, and it's short-sided only for the Qs. And if you sold the Qs at the London Open, you got a price of 14,100. It's currently trading at 13,850. That's a 250 point move on the Qs. That's a $5,000 sell. And that's what you've got to be looking at. You've got to be getting a piece of that action, haven't you? A great trade, lovely outcome for anybody that's just been doing the pre-market London trendline idea and trying to stick with the place, trying to stick with the trade, trying to keep it going in line with the overall shape of the trend. Slightly different because we've got a shorter pre-market. We've only got the hour, and that then shortens it further still. So we do extend the London through to the first sort of half hour of the London Open to try and get an established idea about what the trend is. The pre-market was selling, you should be selling. The pre-market was buying, you should be trying to buy. It's as simple as that as a process, and if it breaks it, you're obviously going to reverse that thought process. So very simple stuff, very easy to spot, very easy to recognize. Now, we talked about the possibility of a bond change. I like what I'm seeing. Now, we talked about coming into 1 o'clock, the possibility that we might get a ramp up in bonds. I suggested perhaps around about 12s to 16s. It's carried on through that, and the reason why it's carried on through it is because of the risk tones. But I do now start to like the idea of a possible bond short going into the US bond open at 20 past 1. We did suggest it was probably going to happen, so if you decided to buy with me onto bonds, to buy it into the long squeeze, or rather the short squeeze, but buy it for the long position, then good stuff. I like your style. You would have been able to get in around about 4s or 5s. It's currently trading 20s, and we're making a lot of money, a lot of cash. So bonds, looking for a possible short into the US bond open. We talked about that in the tweets, and executing it on the right-hand side is still in play at the moment. I'll just tweet that one out whilst I remember. Perfect trade, perfect outcome. The higher it goes, the more we like it. Remember, we're long bonds from a price of 181.28, so we're on our way to a $2,000 upside rally here, which would be nice because we got a $2,000 sell trade from last night's tweets. We're back in that same zone again on bonds that we were in the overnight sessions. Could be very, very exciting. Could be a brilliant opportunity to do some business. And I'm certainly going to be interested in getting some action out of this if it develops properly into this US Open. But we want to make sure we're not trading against the risk sentiment coming into this. If we are, we might find ourselves on the wrong side of a spike higher once we start clearing some overnight stops above 184. So just be very cautious with this sell trade. But it is definitely starting to set up a beautiful looking twist in terms of the 2s, 5s, 2s, 10s, 5s, 10s narrative. So that would be ideal. That would be ideal. So welcome in, guys. I hope you're all good this morning. There's not been a lot of trade in terms of gold opportunities. The kind of short trades that we were able to get about 9 o'clock, that's really been my only interest in gold off the 19 handle at the top edges. From that point onwards, the value's kind of been busted a little bit for the short gold trade. Starting to regain a bit of short value just now. And we can see here that the value on gold, definitely a good opportunity to sell it this morning. You can see quite a nice value divergence into this 19 handle up here. couple of occasions with a good divergence in terms of activity. And then we get a reasonable sell-off, 1900s to 1896.5. That was worth $350. But the retest looks as if it should be good to sell the retest, and there was certainly some value on both sides to resell into this. Never quite got the 19 handle, so perhaps the level 2 break here was enough to get you involved. Bit of selling again, making a few $100s on the way off. But since then, of course, we've seen this big ramp up in value. And with a big ramp up in value, you're probably thinking there's going to be a buy trade coming off this on gold. There was. We never really got much of an opportunity to do any business up here. And obviously the sell that came in off of that was because of the fact that nobody did get an opportunity to do the trade up here. You can see the big, huge volume getting squeezed through to the prior swing highs, the day highs. Big selling comes in behind it, and obviously everybody's waiting for that short trade at the top edge now. Everybody is waiting for the possibility of working short orders up here. It doesn't happen. That's why we get the fast break, remember. If you don't get the volume, you get the speed. If you get the volume, you lose the speed. That's the way you should always remember it. So we get a nice break to the downside, big trade, 1901s down to 1895s. But the value, again, starting to disappear off the high price on gold. I'd love to see that higher print again for another opportunity to work into this. But we've had some level 2s starting to pick up some trade in there. So that's going to slow the process down a little bit. And you're getting reasonable reversal pops here on gold. Nothing dramatic, but still certainly a little bit of value to get short into this area. And obviously the idea is I'd like to see that 19 handle top line price getting tested again, but very, very difficult to recognize how it's going to happen now. We've lost the kind of the shape. We've got a very, very good structure to this. You can see it already in front of you. So there's the lowest structure there. There's the high structure, and there's your half-back trade area. So you get this feeling that you've got the perfect structure setting up in here. If you can only just get that little bit extra, a little bit of a pop, you might be able to get the perfect trade on gold. Sell side top edges, 19 handle break would seem to be a reasonable proposition at the moment. Now this is a very fluid situation in terms of Ukraine. It has sound bites that are sending the markets in one direction and then in the other. We've got to remember that that there is a geopolitical element to our trading today. There has been for obviously several weeks now, and we've obviously been warning people to be very mindful of the fact that normal drivers not as effective, because it doesn't matter whether there's an arbitrage trade. If the market's collapsing or the market's managing to find a right good buyer because of a drop off in risk, the market's not going to care. It's just going to move. So make sure that you're very, very tight with your values. Make sure that you get your basics of your trade right in line, and try and just get sensible with it. Be very, very careful with these drivers today, guys. It's a very, very dangerous market to trade in. Make sure you're very, very conscious about getting your stops into break-evens once you've got a bit of money there, so that you don't get spiked on a bit of news and it takes you right off the numbers with a big loss. Do not slip through these types of things by simply falling asleep at the wheel. Today is not the day to fall asleep at the wheel whilst there's a global geopolitical situation. We heard earlier that the DEFCON analysis has moved the DEFCON ratings. It's almost like a max situation where we go through the different phases, but the DEFCON is now up to 3. And to put that into context, it's the same DEFCON rating that we had during the Cuban Missile Crisis. So it's not very often that you see DEFCON going up to 3, but it's at 3 now. And as I said, same level as the Cuban Missile Crisis. And that's something you just have to be paying some sort of attention to. It's dangerous. It's a risky environment. And therefore, you've got to make sure that when the trade happens, you're not caught on the wrong side of a quick reversal trade.